because it is incredible. And I love this space and particularly multifamily. So I love what you're doing here. And thank you for providing education to people, because I think our community is only lifted up when everyone has education available to them. So
Oh, I appreciate that. And I got to interrupt you real quick, Bethany. I'm going to do a plug for Bethany here. Every single week, she does calls about funds and syndications that you can join free of charge, and it's just Q&A. So Bethany, if you have a link, if you want to mind at some point throughout our presentation, if you could provide that to our group, and we could provide that in a follow-up email as
yeah,
well, so we could
sure.
get people on.
I'll
But
yeah, I can do it at the end there. I'll have to get it. But it's easy, and we can always if you email team@plglp.com, you can get the links to all the free stuff that we offer to people for education purposes.
Excellent. And this is why Bethany and our team get along, PLG and our team get along so well, because we're so focused on just educating and letting people know there's other options. And it's
Yeah,
oftentimes better options out there, and you just don't know what you don't know.
truly. And I'll tell you, one of my big things is helping people create conscious wealth, right? And that's why I do what I do. Obviously, there's the technical piece of being a lawyer, but creating conscious wealth, there really are only 3 elements to it. It's simpler than people might think. And the first and very biggest element is education. The second is mindset. And the third is access to opportunities. And that's it. With those 3 things, you can create conscious and sustainable wealth. So the education piece you've got covered here. And I think you covered an opportunity just last night. So I think you're really doing well. So if you don't mind, I'll dive right in then about what people really should
Absolutely.
be
Yeah.
looking for. So when you've got a deal that's being presented to you as a passive investor, you're going to get a couple of things. First, you're going to get a slide deck, right? Pretty pictures and talking about what the deal is. That's going to be your high level and your first introduction probably to what the offering is. That is important to actually look at, because that is actually part of the offering. So those things that people send out to you in the webinars and everything else, pay attention to what the deal is that you're being offered. What is the preferred return if there is one? What is the equity split if there is one? But when you get into the meat of the documents, you're going to get a packet of documents. As Dallin mentioned, it's over 100 pages. And while I always tell people you should read it all, you should. I also know that you're not going to. So I will help you navigate where you really at least need to be knowledgeable, and in the first places you should look. And what's included in those packets, as Dallin mentioned, is it's a PPM. It's a private placement memorandum. That is a disclosure document. That document is specifically geared towards letting all potential investors know what are the risks of investing in this deal. Okay, what are all the risks that we could possibly think of that you should be aware of prior to deciding, hey, I'm going to wire you guys this money. Okay. Second to that is going to be the operating agreement. Operating agreement is just the rules of operating a limited liability company, which you are going to become a member of when you invest in this deal. So you want to take a look at that, because that's how the company will, it's an operating agreement. That's exactly what it means. That is how the company is going to operate after the closing. Then you're going to see an investor questionnaire. That is very important for you to actually fill out truthfully and completely, because this lets the sponsor team know who's investing to make sure that it's actually a good fit. Because just like they want you to invest in their deal, they have to make sure that it's a good fit for them as well, right? Not every investor is suitable for every deal. So this is sort of a two-way street, and they need to know that you're suitable for the deal, whether it's a 506B or a 506C, if you need to be accredited or you don't. So it's important to pay attention to the investor questionnaire as well. And then finally, there's a subscription agreement, which is just your agreement as a limited partner or a passive investor that says, I'm going to commit this much money. This is my agreement that I'm going to do that. And then at the end of the packet is going to be another copy of that business plan that you've already been walked through, probably on a webinar. So let's dig through the PPM, because that is really the biggest chunk of it. It's probably 60 to 75 pages, somewhere in there. And it looks really daunting until you kind of break it down into what are the sort of the basics of it. Believe it or not, the first place I advise investors to look is the definition section. And I know a lot of people skip over the definitions because they're like, yeah, whatever, table of contents, whatever definitions, I'll just read it in the body. Don't do that. Read the definitions, because most lawyers, myself included, we will try to break down really complicated terms or really complicated ideas in the definition section, so that then we can just refer to it later in capitals, right? Capitalized letters. And that way we don't have to re-explain it 7, 8, 9 times, right? So the definitions are actually really important. And if you skip definitions and you get into the body of the document, you see things that are capitalized, you know there's a definition for it. If you're not sure what it means, go back to the definitions, right? Usually at the beginning, and read what they mean. So preferred return is one of those things that's going to be defined. You need to understand what that means. The fees that the sponsor team is taking, those are defined in there. So if there's an asset management fee or an acquisition fee, you should understand as an investor, what does that mean? When is that going to be taken? Right? What percentage of what is it, right? How much is it as a one-time fee? Is it a flat fee? Whatever it is. So the definitions are going to be defined. You're going to see a definition of what the classes of investors are and where you land. In our offering documents, the limited partners or the passive investors are usually Class A members. So what does that mean? Who are the Class B members? That's usually the sponsor team who's involved. So the definitions, you definitely don't want to skip over that. It's really important to understand that. Now, there are going to be some definitions that are going to be the same in every document, right? Like, what does company mean? Well, actually, in this case, that's one you want to look at because that's the title of the LLC, the name of the LLC. So some of them are just are legal terms, and others are going to be deal specific. So you really want to focus your attention on the deal specific terms. So I'm going to pause for a second and see, Dallin, if you have questions or anybody has questions before I get into the next thing, because I know sometimes people are like, wait, what about this?
Feel free to unmute or throw it in the chat box if you've got a question.
And that's true. Feel free to interrupt me, by the way, if I say something and you're like, wait a minute, you're not going to throw me off. So feel free to jump in. This can be interactive. So beyond the definitions, I'll just keep going until people have questions. How about that? Does that work for everybody?
That sounds
perfect. Beyond the definitions, you can skip down to the part where it'll usually say something like distributions or allocations, things like that. That's going to tell you what is the waterfall, what is the deal that the investors are getting, right? You should know that. And it also, by the way, should match what you saw in a webinar or in a business plan. If you thought the deal was one thing and you got far enough to ask for the documents, you're going to want to check and make sure that the deal hasn't changed since the first time you heard about it, or make sure you understand it, that you understood it and it's now the same as what you understood in the webinar, for example. And if you're not sure, right, if you're like, I think this means that, but I'm not really sure, ask the question. The sponsor team wants to tell you. They want you to understand. This is not a situation where they just want you to put your money in and sort of just duck away and forget about it. They want you to understand up front, because that's going to save everybody headaches down the road. Nobody likes surprises in these kinds of deals. Okay.
That's a really good point, Bethany. And I just want to state, if we didn't want you to understand what was in a PPM and operating agreement, we wouldn't have invited Bethany on to teach you how to read through a PPM and operating agreement, right? Exactly. There needs to be a high level of transparency between the operators and the investors. And in order to do that, investors need to understand, at least have a foundational level of understanding and information to know how to vet and look at these opportunities.
Yes, absolutely. There should be no mystery. This is not the kind of situation where mysterious is cool and sexy. Full transparency is it, right? So if you read the waterfall and you're like, well, wait, when does the pref get paid? Or when do we get our splits? Or when do you start making money, sponsor team? That's a good thing for you to understand prior to going into the deal, because when it comes time for distributions, and it's not what you thought it was going to be, that's not the time to ask, because these are illiquid investments. Once you're in it, you're in it. Right. And so if it's not what you understood it to be, it's good to understand that upfront. And the same is true, by the way, of the tax situation, right? If you understand the taxes are going to be allocated, or depreciation is going to be allocated one way, or is there bonus depreciation? Is there a cost segregation? Understand and then talk to your tax advisors to make sure that the tax treatment is suitable for whatever your goals are, right? So make sure you understand what your goals are first, and then talk to your advisors to make sure. I mean, one of the big, huge benefits of investing in multifamily real estate is it's got some really great tax benefits. Make sure that those really great tax benefits match your specific needs, and do that prior to getting into the deal, because tax time is not the time to sort that out. The sponsor team is not going to be able to make a bunch of changes to these documents to support your specific tax treatment, because every investor would be affected at that point. Right.
I want to touch on this real quick, Bethany, and I'm glad you brought it up. Your attorneys are not CPAs and your CPAs are not attorneys, but they both need to align with their definitions and in the operating agreement. So what unfortunately happens sometimes is the operator comes in saying, hey, we want to structure it this way. They don't do their due diligence to make sure that the attorney and the CPA are on the same page. So what they're telling their investors is not what's actually in the operating agreement, because the attorney wasn't notified of what was happening. And then the CPAs have to follow the operating agreement because that is the legally binding document. And so all of a sudden, tax time comes at the end of the year. People weren't getting the depreciation or the losses that they thought they would. The operator is blindsided because he assumed everybody was on the same page. It is two different languages. All right. So as you're preparing for these investment deals, make sure you have a good tax advisor on your team. And just a few days ago, before our opportunity, we had Bethany's team on a call along with our CPAs for an 1.5-hour session of legal jargon and accounting talk. Talk about a fun call, right? That sounds really exciting.
That makes you want to drink right there.
But an 1.5 hours, because that's we wanted to make sure that everybody was on the same page. And we were fortunate to be able to get the executive team on the same call. So as the CPAs were stating something, the attorney was able to go back and say, okay, I updated that in the operating agreement. So that's one of those things that's often overlooked when you're passively investing. Now, a lot of reason people get into real estate, especially multifamily, is for the tax benefits. That's not as important to you. At least still understand how it could come through. And the important thing to understand too is that when you get involved in these types of funds or syndications, you are becoming a member or a partner of that LLC. So you share in the profit and loss. That depreciation will pass through to you as an individual. So it's important to understand those things.
Right.
And I promise you right now, if you started asking your attorney CPA questions, Bethany, what are you going to tell them?
I'm going to tell them that I'm not a CPA and that you should check with your tax advisor.
And you start asking your CPA questions, legal questions, what do you think they're going to tell you?
Absolutely. They're 100% going to say, I'm not an attorney. Let's talk with your attorney. And that's why it's great to have them talking together so that you're not having to interpret to the other what the other one was saying to you. That's why we do those calls with your CPA, is because if I tell you something and then you interpret that in your way when you're not a CPA or a lawyer, and you say something to your CPA, it might get lost in translation. And so the safest thing really is to have us talk to each other. And that's going to save everybody some hassles down the road. So that 1.5 hours was well worth everyone's time, in my opinion. And you're talking to somebody who works on a flat fee, by the way. So it's not like, oh yeah, I got to bill him for an 1.5 hours. No, we work on a flat fee. But what that does is it saves us from having to make changes at tax time, right? Which then upsets investors, and it's just not a thing that you want to have to do. If you can avoid it at all, and it is avoidable by having meetings like that.
Awesome.
So the allocations of the distributions, or the profits and the allocations of the losses, those are really important sections to take a look at and make sure that it all matches, one, with what your understanding of the deal was, and two, that it matches what your goals are for this type of investment. The other thing to look at, and hopefully you did this prior to getting to the legal docs, but look and see, who's involved in the deal. And then it's who you understood to be involved in the deal, right? That's all going to be disclosed in the documents. Who are the decision makers of this deal, right? And make sure that matches with what your understanding is. And then also make sure that you're all aligned and that you've done your own diligence on the sponsor team, right? And that you're comfortable, because these deals, I think everybody who's good at this, and down, I'm sure he'll nod his head as soon as I say it, is you can find a stellar deal, but if you don't have a good sponsor team, it is not going to go as well as if you have a kick-ass sponsor team. And a kick-ass sponsor team can take a meh property and kill it right? And so the people involved in the deal are more important than the asset, in my opinion.
I'm so glad you brought this up. I share it, probably one of the most frequent things I share, and that's our process at Rev of how we vet opportunities. And we share this with everyone that they should do the same thing. Number one, you start with the operator for the exact reasons that you shared. You start with the operator, then you look into the market that that property is in, and then you look at the deal itself. Because at the end of the day, nobody's going to show you a deal that looks crappy. They're not going to show you a deal that doesn't look like it's going to be a home run deal. But if you're vetting the operator effectively, if you're vetting the market effectively, you're stacking the deck because there still is risk involved. This isn't a risk-free investment, but what you're doing is you're stacking the deck to ensure that there's the best possibility and potential for that deal itself.
Right. And I mean, I cannot stress that enough. I mean, when I'm talking to clients, I tell them, make sure you vet all your partners too, right? This is a marriage for usually 5 to 7 years, 3 to 5 years, whatever the life of the deal is, maybe longer if it's a fund. So it's a marriage. So everybody should know who they're marrying from both sides of the transaction, right? Another important thing to note, and this is just something to know, it's going to be in the documents, but you should know it because it's always going to be in the documents. And that is, as a passive investor, if you don't already know, you are passive. That means that you have very limited voting rights and almost no say in how this deal gets managed, which is exactly why you want to vet the sponsor team, because they are in charge of making all the decisions, right, to whether or not this property is going to produce the returns that you're hoping for, right? So they are making all the decisions. You will not get to vote on who the property manager is. You're not going to even get to vote if there should be a refi. You're not going to get to vote if it's good, if it's time to sell, right? The only time that passive investors get to vote is one, if they need to remove the manager for cause. And cause is pretty strictly defined as usually it's just a continued inability or lack of managing the deal in a reasonable fashion, and or criminal activity, something like that. So it's really rare. If you've done your diligence, that's probably never going to happen. And two, if the sponsor team changes the allocations that you agreed to, meaning you thought it was an 8 pref and they're like, you know what, the market tanked, we can only pay a 6 pref. You got to vote on that because it wasn't what you signed on for. That's it. Those are the only times that passive investors are going to have a vote, right? So that's something to understand prior to getting into it, which is why, again, the team is so important, right? And then one of the really big things, you're going to see pages and pages and pages of risks, right? What are the risks? There's risks of involved in investing in securities generally, right? Usually there's no operating history to speak of because it's a brand new LLC formed specifically for this property. It's a security, which means it's not a loan, which means that if there is no money in profits, there is no distribution, right? So there are risks involved in acquiring securities. There are risks involved in investing in real estate. There are competitor properties. Those are going to be the almost the same in every deal you look at. So I'm telling you those risks. You probably know those risks by now. If not, read them. But if you've done 1, 2, 3, 4, or more than one deal, I guess, you can skip that part and go straight to the business plan risks, right? And the business plan risks are, what are the risks specific to this particular property and this particular investment? There's always the risk of investing in real estate. There's always the risk of investing in any security. Okay, fine. But is this particular property, we've got to disclose, is it built on, Native American burial grounds? Is it, I don't know why I always use that as an example. I think of Poltergeist when I think of that, like someone should have disclosed that. And I don't know why. Is it built on a city dump? Are there environmental issues that should be disclosed? Those kinds of things. Is there an issue with occupancy, something like that? So you want to look at what are the risks of this particular deal. And the first time you're really going to see those is going to be the PPM. That's not exactly marketing material that's going to go into a pitch deck, right? So you want to make sure you read that. And that is appropriate. It's not like it's hiding the ball because you are expected to read these documents, right? And those risks can vary. Is there some risk associated with your sponsor team that they want to disclose to you? You want to have all the information available to you so that there are no surprises down the line. And that is true. We make risk disclosures even in a 506c offering, where technically speaking, the sponsor gets to choose which disclosures to make. We still make all the disclosures, right? Because we always advise our sponsor teams to just get it all out there and make sure that you don't have any questions, going forward. And that's what's really important, because technically speaking, the sponsor team, they have to disclose to you whatever's material. Well, material is one of those terms that is what would sway a reasonable investor to make a decision to or not to invest. You can see where there might be some different interpretations to what's reasonable and what's material, right? So we say, put it all out there, right? And if you have more than just a few investors, it just usually makes sense to do that. That's our approach. We're pretty conservative. You may have invested in deals where it's just, a few risk disclosures in a subscription agreement. If it's a 506c offering, it's not illegal to do that. It's just not always advisable if there are things that really need more context. And so that's why we like to put everything on the table all at once.
You touched on something earlier, Bethany, that I want to reiterate. I can't stress this enough, right? The first thing you're very going to likely see as a passive investor is the pitch deck or the opportunity. It's got all the fancy numbers. It's got the images. It's very visually appealing. Okay. You've got to, that's not legally binding, right? That's an opportunity. What's legally binding is going to be in your operating agreement, and what's going to be more disclosed is in the PPM. You've got to make sure that what they're presenting in the pitch deck is aligned in the legal documents, because it's your job. At the end of the day, it's your job to do your due diligence as an investor, because things might change by the time they send out the pitch deck than what they actually finalized. And it's your job as an investor to make sure that those mirror each other, that they're aligned. Now, good operations teams are on top of it with their attorneys to make sure that the pitch deck is aligned with the legal documents. Bethany and her team reviewed both of that on our opportunity we just launched last night. So they reviewed the pitch deck, they reviewed the business plan and the legal docs to make sure that it matches up. But it's still your job as the passive investor to make sure that that's the case. And if you do have questions, ask. I'm telling you, we as operators want you to ask. We want you to ask. We want you to understand what you're getting involved in, because the the conversation that no operator enjoys having is with an investor, when the investor says, well, you told me this, or this is what I had thought. We'd rather discuss that before we're committed, before we're together. So ask those questions ahead of time. That's why all this information is out there. I know it's a lot, especially if it's your first time doing this. It's like drinking it through a fire hose, but take time. Our team is here to help you work through those things.
Absolutely. And I'll tell you, our firm does this. I don't know if every law firm does this. I would imagine so, but our firm, we bake into the flat fee a couple of hours of time if investors have questions about the legal docs. So if you ask a question about what does this mean, right? If it's about the deal, you should ask the operator, right? But if it's about the legal docs, ask the operator to set a call with their lawyer, because who better to explain to you what those documents mean than the lawyer. If you don't have your own lawyer, if your own lawyer looks at it and they want to, they can advise you as well, that's fine. But I mean, frankly, if you have a question about it, their lawyer's already paid for. So you can ask that question. If you want interpretation of the legal docs, ask. The lawyers will be happy to explain it to you as well, because they don't want to see their client, get called out later for something being unclear later as well. And if there's something that's unclear in the documents, I also want to know, because I always want to get better. If I write something that makes sense to the operator and to the legal team, because the operator is the one that brought the deal together and we're the legal team, but it doesn't make sense to investors, I want to fix that going forward. We want it to always be clear to the investors, because that's who those documents are written for, is for the investors.
Absolutely.
So, so that's the PPM. Okay. Then you want to look at the operating agreement, and I'm not sure how we are on time. So I can.
We've typically been trying to keep these to about 30 minutes, but this is great information as well. And I think it's stuff that needs to be discussed. So let's let me open it up to the people that are tuning in. I mean, this is really for you. Would you like Bethany to go into and touch on operating agreements, or should we just open it up for some Q&A for a few minutes and end on that note?
It's a quiet group. And if you're at work listening in, and there you go. I was to say go ahead and type it. All right. So Amanda wants to hear about operating agreements, and I'll be very brief, I promise. So with the operating agreement, a couple things you want to check. Again, look at those definitions and make sure that they, again, match your understanding, but also make sure that they match the PPM, right? Because the PPM is your disclosure document that tells you all the risks and all of that. The operating agreement is going to be the rules of the road for going forward. So you want to make sure that all the fees are disclosed in there, or identified in there. Again, fees. The waterfall, again, should be in the operating agreement, and it should match what's in the PPM. And you look at the voting section, although I already told you that your voting rights are going to be very, very limited. Check and make sure that you're comfortable with the management team who's signing as managers. And then check in our documents, it's section 7, check that tax section, right? To make sure that the tax section matches what your understanding is. So there are disclosures in the PPM, but what your CPA has to follow and what the operator CPA has to follow is in that tax section. That if you do, nothing else besides check the fees, check the allocations and distributions, you're going to be pretty set, because a lot of that it's not really negotiable. You just want to make sure it matches your understanding, right? So section 7 in our operating agreements is going to be the tax section. That section, by the way, is written by a CPA, and the only way I change it is if another CPA asks me to change it. That's it. I don't touch it otherwise. So I can open it up to questions from there, because that's, the rest of it is just you fill out the questionnaire, and we already touched on that.
Bethany, this is Ram. I have a quick question. What can you share from a general partner standpoint when it comes to PPM or operating agreement? I know you covered a lot of information from the limited partner standpoint, but what can we learn from the general partner standpoint?
So if you're a general partner,
Yes.
I mean, the thing about the general partners is kind of just the flip of what I just said, which is make sure you're disclosing all the ways you're making compensation. That's a huge one, right? Not just if there's a management fee or asset management fee, acquisition fee, whatever, but if you're also a broker who's going to make compensation on this deal, you should disclose that to your investors. If you're the property manager, your company's the property manager, you should disclose that to your investors. So if you're affiliated with a group that's going to make compensation, you should disclose that to your investors. So that's one thing to make sure that you put in there. And I would also make sure that you're reviewing the documents as a GP to make sure it matches with what you intend to tell your investors, or matches what your business plan or pitch deck says. That's really critical, because everything that goes into the PPM and the operating agreement and all the documents should be coming from you as the GP, right? I don't know what you plan to do unless you tell me. Right. And so if I'm not understanding, or if I'm not interpreting, or our team's not interpreting the business plan appropriately, we're going to rely on you to review all that and correct it prior to it going to investors. So it is important for the sponsor team to actually read their documents as well. I love it when my clients trust me, but I want them to trust but verify, because I know the law will be right. I don't know if the facts are right until you tell me. Right. So I think it's even more critical for the GP team to read the documents, even though it's 100 pages. Right?
I'm going to reiterate that. Now, Bethany and her team, good securities attorneys, are going to do a phenomenal job putting stuff together, but every syndication is different. Every fund is different. Different operators want to operate it slightly different. So while they're putting together these legal docs, you're sharing with them what you're trying to accomplish. And yes, they're taking notes. Yes, they're putting it in, but there's a lot of pages. It's over 100 pages of stuff. And one of the most painful things that I had to do over these last few weeks, getting ready for our opportunity, was to read all those legal docs word for word. But there was tiny little changes that we had to make. that we had to bring up to the attorney. He said, "Oh, yeah, slight overlook, my bad," and and he went in and he fixed it. We're human, right? We're human. They're trying to take what we're visually and verbally explained to them and putting it into a legal document and type it out. Things can get overlooked and things can get missed. So as an operator, as a sponsor, take time to read through that.
Yeah.
And here's the deal. Who's going to be the first person that investors ask questions to when they don't understand something in the legal docs? It's going to be you as the operator. So if you don't understand it, how's that going to make you look in that situation?
Right.
Good luck trying to win the confidence of that investor if you can't even explain your own operating agreement in PPM.
Yeah.
Right?
Definitely ask questions. Just the same as the passives, as the GPs ask the questions, make sure that you're comfortable with the documents as well, and make sure that you're reading them. And the other thing that I would also let all GPs know is, don't assume that a change you think is minor is minor. One of the things you're paying us for, we don't get paid just to draft up PPMs and operating agreements. That's actually not that hard. What we're paid to do is know what thing that you're doing triggers a change in the docs or triggers something that has to happen in the document. So I've had people be like, "Oh, it's no big deal. I just want to add another class of investor." That's actually a really big deal, right? So don't assume that it feels minor to you, that it's not going to impact the documents. Just let the lawyers know if we need to make changes, we need to make changes. That's fine. Rather know that now rather than have to change things after you've taken investors' money.
Very good point. At the end of the day, folks, when you have a good team that's working synergistically together, it truly is to create a win-win all the way around, right? So it's especially these types of deals that we're getting involved in, there's a lot of moving parts. So you got to make sure that you have a good, well-rounded team around you. And that's why we're excited to be working with Bethany and the rest of her team on this opportunity, because they've been in the business, they've been in the space for years. They know this stuff. So we're really excited to be working with them. Well, we appreciate everyone coming out. Is there any last minute questions, last minute comments? Barbara, I see a comment here. I might have you expand a little bit on it. You said that you're interested in reviewing the PPM and operating agreement. Could you be a little bit more specific?
How do I obtain them? So do you mean for this deal, Barbara, that they have active right now?
Oh, okay. Barbara, I'll connect with you after this call and we could talk about that. Excellent.
Perfect. And then I put the so team@plglp.com if you want links to the PLG live Zooms that we have. The primary one is Mauricio has one. My partner Mauricio Raoul has a live every Wednesday at 4:30 Pacific. That is just mauricioraoul.com/live. You don't have to remember that. We'll get it to you. And then I do one every Wednesday at 1:30 Pacific on funds and fund of funds. So you're welcome to join that one. And then, you can be on the list for any time we have any other free ones. And then we have a pretty deep library of YouTube videos that is pretty much a primer on real estate syndication. So you can check our YouTube channels out as well.
Awesome. Thank you so much, Bethany.
Thank you for having me. I appreciate it.
Yeah. And for everyone else on this call, we're going to throw a link here into the chat box here. This is our opportunity that we just launched last night. Now, this is a 506c offering, so it's only open to accredited investors. If you're not sure what that is, there's information within that link that explains that, or we're happy to jump on a call. So what we've structured is a fund of funds. So given the current times and market, we're not investing into a specific deal. We're investing into multiple deals in multiple markets to offer a higher level of diversification that most other operators are having a hard time providing when they're focused on the asset itself. So click on that link. There's information, there's summary. If that's something you're interested in getting involved in, let's jump on a call. We want to make sure first and foremost that the alignment is there. And then from there, we could determine if it's a good fit to move forward with partnering up. So appreciate you all for jumping on our call today. We've got another call next Thursday, and really excited to go through that. And again, Dallin, president at Rev Equity Group, we're here to provide education for you as investors so that you can better improve your financial future. So thanks for joining on, and we'll catch you all next week.
Thank you.
Thanks again, Bethany. Appreciate it.